And I think what we're looking at is an event that you're not going to be able to recover from. If this market snaps and the markets close and you're not in position, you're out. You're out for the rest of your life. This is going to be an event that you can't recover from.
Hey guys, I have an urgent update. Today is Saturday, April 30th, and we have Bill Holter from JS Mineset back on the line. Guys, things are breaking down. Something big is happening. Recall the recent behind-the-scenes secret meetings between Obama and Yellen? And now on Friday, the U.S. Treasury has given explicit warnings to China, Germany, and Japan not to devalue their currencies. There's extreme dollar weakness, and the best performing commodity asset to date has been silver and silver stocks. Bill, something big is going on. How are you?
Good, Sean. Yesterday the USDX index closed at 93.01. Chartists were looking at the 93.5, 94 level. Give it a little leeway and say a 92 handle is a breakdown. Under 93, you really have an elevator shaft if you look at the charts. You could see a move down to pretty quickly down to the 86, 82 level, and then of course the all-time lows are 72. The dollar is devaluing versus other currencies. We've dropped from 98, 99 down to this 93 level, and of course you've seen gold and silver explode. I sent you a chart earlier showing gold priced in the USDX index, and you can see that's about ready to break out. It's maybe 12 or 14%, something like that, below all-time highs based on all currencies. So if you look at that chart, you can see the MACD looks to be turning higher, and we've got an event in the metals. Silver has been spectacular, obviously, and fooled a lot of people that trade it based on the COT numbers. The COT numbers for the last few weeks, open interest has expanded. I think there's something like 25. They finished the week or finished beginning the May delivery period with 25 or 27 million ounces standing for delivery. They only have 32 million to deliver. The COT numbers, there's more shorts, more commercial shorts in silver than there has ever been. And you've got pundit after pundit coming out saying, be careful, and silver just keeps chugging higher. So it's a head scratcher to the people who watch the COTs. It's not so much a head scratcher to me. I mean, I firmly believe that you're going to see the COMEX busted. And we've just gotten done with, 7 or 8 days after the open of the ABX exchange, and I think you're definitely seeing the physical market start to overpower the Western paper markets.
Yeah, that's right, Bill. And, the reason I think that something big is happening is because it's not easily explainable why silver's up 27% year to date if the banker paper manipulation was still able to rule the world. With the SGE coming online and the gold fix in China, we see the move to physical happening in earnest. And what's going on over at the SGE, Bill, as you know, they don't want anything to do with LBMA paper or COMEX paper. And I think you're absolutely right about a COMEX default. Sooner or later, the jig is up, right? Because the Asians don't want anything to do with the COMEX or the LBMA.
Well, of course. And I had a big back and forth this week with a writer regarding a default on COMEX. It just makes common sense that when you have 300, 400, 500 times as many paper ounces sold for every 1 real ounce that exists, sooner or later there's going to be a blow up. And what this ABX exchange is doing is, and the fix in China, what it's doing is it's real demand. In other words, when there are purchases made, it's actually gobbling up real metal. And it's tightening the markets up. It's tightening the physical market up. And that's something that COMEX can't have. It can't have tight physical markets because physical markets, I mean, they don't deal in physical, they're dealing in paper.
Well, Bill, one thing we know for sure, what's happened so far this year has defied every expert's expectations. You, me, Andy Hoffman included. We knew this day would come, right, when silver would start to rise on a daily basis.
Right, but we didn't know when.
We didn't know when, and I don't think anyone expected to see the stocks, the silver stocks, go up 200 to 400%, year to date. The moves have been absolutely incredible, and I think it speaks to the fact, Bill, that Wall Street, big money, is moving into stocks. Because as much as you and I and all our listeners are silver bugs and gold bugs, we're not the guys moving the market higher in paper metal stocks. There's big money moving into those metals paper stocks, Bill, and I think that speaks to a real bull market. That's our quantifiable proof right there, that what we're seeing in silver moving up 27% year to date, that's not just a banker game. I don't think that they're trying to take it higher just so they can get everybody in and slam it down again and kill sentiment. They're taking the silver stocks and the gold stocks higher, Bill, with big money.
Right, and it's totally logical, Sean. We know there's this big paper short in the metals themselves. You're talking about silver up 27%. The HUI, that's the Gold Bugs Index, is up 130 points. It's trading it closed at 233 versus a start of the year around 100, so it's up 130%. Silver stocks are up even more. Now, I'm going to tell you that's totally logical because what that is the big players, the commercials on COMEX, understand that they cannot cover their position on COMEX. So what they're doing is they're covering their position with the mining shares. They're trying to cover their short positions with the operating leverage of miners.
Yeah.
With their metal in the ground.
Yeah, I think you're absolutely right, Bill. And we've talked about this in the past on interviews that once silver and gold broke out and broke the paper, we may be looking at a runaway bull market in silver. There may not be many more dips at this point. The WebBot project is saying we're going to see these moves in silver, the same moves we've been seeing. We're going to see limit up days here in the near future. We have Dave Kranzler, our buddy, saying this thing is about to get out of control and move to the upside quickly. If silver breaks 21, Bill, it's clear sailing to 26, and past 26, there's really no stopping it all the way back to 48 or 49.
Well, Sean, I think you can forget about technicals because once this thing snaps, there may not be open markets. And I have written and said for quite some time now that once this thing gets moving, it's the rally you never sell. You never sell it because what you're doing is you're re-entering. You'd be exiting metal, exiting the miners, whatever, and restocking your supply of fiat currency. And that's what you tried to get away from in the first place. And I think what we're looking at is an event that you're not going to be able to recover from. If this market snaps and the markets close and you're not in position, you're out. You're out for the rest of your life. This is going to be an event that you can't recover from.
Yeah, I want to play a soundbite for you here in a minute that I think is extremely curious and worth talking about. But first, I want to mention, Bill, some of the incredible headlines from just the past 72 hours. Now, you and I have been talking about the collapse for a very long time. What does a collapse look like? When it's a blue sky, beautiful Saturday, and people are out watching their kids play lacrosse or soccer or baseball, collapse is hidden in the background, right? We don't see it. But for those of us who are paying attention, we see it. Again, I want to mention that Obama-Yellen secret set of meetings. And I want to re-mention the U.S. Treasury giving explicit warning to China, Germany, and Japan not to devalue their currencies.
Sean, the Treasury warning other countries not to devalue their currency means that the Treasury wants to devalue the dollar.
And when I asked a senior member of the Obama administration last week, how are we going to grow exports if we won't allow nominal wage deflation? And he says, we're just going to kill the dollar. And I said, okay, more you mean.
Correct, but listen to this. Now, when we talk about collapse, what does it look like? J.P. Morgan's quant guru is now worried about the end game. Goldman Sachs was just stopped out of its short gold recommendation. Obama bashes the movie The Big Short and says Wall Street is A-OK and claims that he saved the economy. Nobody believes a word of it. Head of Deutsche Bank's Integrity Committee fired for being overzealous. Now remember, Deutsche Bank just admitted to rigging the paper and silver gold markets. and the head of the Integrity Committee has been fired. McDonald's CEO says a $15 minimum wage will wipe out thousands of jobs. And here's a couple of biggies. As you know, Russian jets have been buzzing U.S. warships and spy planes over Russian naval bases. And the big one, on Friday, China would not allow a U.S. aircraft carrier to port in Hong Kong.
Yeah, those last two are, in my mind, the biggest. I've said before, and I am not a tech guy, I have no idea, but it just seems to me that if Russia keeps buzzing our ships, doing barrel rolls over our planes, it seems to me they may have some type of technology that can shut down our electronics. That was speculated after the Donald Cook year or 2 years ago, and I think what they may be trying to do is display power. And that puts us on our heels, and I honestly believe that Russia and China do not want war.
Well, I hope you're right about that, Bill, and I think that you probably are, but one way or the other, we're headed into a monetary World War III. I think we're already in the midst of it. And I think the significance of what we're seeing now, as China and Russia move away entirely from trading in the dollar. We see the Saudis threatening to sell their treasury position over the 9/11 28 pages. We see the entire world now turning against the former biggest bully on the block. And what happens to the biggest bully in the school, Bill? When you punch him, when you stand up to him and you punch him in the chin and he goes down.
Right,
He's not a bully anymore.
Now, you mentioned Saudi Arabia threatening to sell the $750 billion in treasuries. That's not the threat, because the ESF or even the Federal Reserve could step up and buy that $750 billion with the click of a mouse. So that's not the threat. I don't think that would be the problem. But it would signify the end of the petrodollar. There'd be no more oil revenues flowing into treasuries. Now, I'm going to go one step further. Well, actually, let me step back a bit. The problem with that is then you would see the dollar collapsing. And the one thing the Fed cannot do is they can't support the dollar because they can't print dollars to buy dollars. And the U.S., being the reserve currency, we never built up foreign reserves because there was no need to. And it is my suspicion and pretty obvious that the U.S. has liquidated its gold. So they don't have the gold to step up to use as reserves to support the dollar. Now, going one step further, we know that Saudi Arabia has been in talks with China. Saudi Arabia and Russia are vying back and forth to be China's largest oil producer. What if King Salman announced a deal with China and announced that in yuan? Let's say they did it on a Friday night or over the weekend. Monday wouldn't come. I mean, markets would be destroyed before they could even open.
Yeah. It's very possible, and we've said, Bill, the end will come like a thief in the night. And, you know, when you see silver up 27% year to date, knowing that the banks don't want that, the criminal banks don't want to see silver and gold displace the dollar, right? They don't want to see the confidence in the petrodollar broken. The end could come like a thief in the night. And what you've just described is the end. And as we've been documenting, John Williams has been predicting hyperinflation of the dollar would rear its ugly head in 2016. You know, up to this point, that didn't seem possible. I'm starting to believe it is possible, Bill. It could happen. It may not happen till October, November, but it could happen in 2016 that we could see the dollar crash.
I think you're absolutely right. And you keep saying 27% year to date. That is going to be in the rearview mirror, small potatoes. I mean, you could see, the price of silver, call it $18 now, or silver in your hand, $20 or $21, whatever. You could see moves of $18, $20 a day and larger than that when this thing snaps. When they lose control, there's no way to peg a price. There's no way to forecast a price.
All right. Now I want to play that soundbite for you that I mentioned just a little bit ago, and I want your impression of this. I don't know if you've heard this, Bill, but this is a big one. This is General Mark Milley. He's the U.S. Army Chief of Staff, and he was giving the keynote address to the ROTC Centennial Symposium on April 22nd at Norwich University. And I want to play for you something that he said that I think is startling and speaks to what we've just been talking about, which is a complete and total breakdown of society as we know it. Listen to this.
If the world of 1916 was complex, or the world of 1945 was complex, the world of 2016 is intensely complex. And I can tell you that from personal experience, and I know there's many others who can tell you that as well. And you will graduate and be in that world, and you're going to be leading the soldiers and the sailors, the airmen and the Marines in that world. You'll be dealing with terrorists. You'll be dealing with hybrid armies. You'll be dealing with little green men. You're going to be dealing with tribes. You'll be dealing with national leaders and local leaders.
Did you hear that?
Yes.
Bill, I want your impression of what he just said. You'll be dealing with terrorism. You'll be dealing with hybrid armies. You'll be dealing with little green men. This is General Mark Milley, the U.S. Army Chief of Staff. I'm not sure about the little green men. Maybe it's Project Bluebeam related. Maybe they know something about aliens that they haven't told us yet, Bill. But hybrid armies and tribes and terrorism, that sounds like economic collapse and the total breakdown of U.S. society as we know it.
Yeah, all I can say is wow. That's unbelievable.
It's powerful, right?
Very powerful, and it does make you think. You know, what exactly is he talking about? What does he know that we don't? Obviously, he has information that we don't have, and for him to throw that list out, that opens up, all kinds of potentials, and it tells me they know it's coming.
And I'm going to play it again just so everybody can hear that last part about terrorism, hybrid armies, and little green men. Listen to this.
You'll be dealing with terrorists. You'll be dealing with hybrid armies. You'll be dealing with little green men. You're going to be dealing with tribes. You'll be dealing with national leaders and local leaders.
Bill, I agree with you. I think that the powers that be know some things that they are not telling the people. And you and I have been talking about this for a very long time. The most horrifying narrative that could be told is the story of what's going on behind closed doors between Obama, Yellen, and their Wall Street partners at JP Morgan, Goldman Sachs, and the other criminal banks. What's going on behind the scenes, I think, would make people's toes curl if they knew how close to the end we are.
Well, Sean, we do know that. I mean, you can see it from a financial standpoint, but you need to make the leap from a financial standpoint. When that collapses, what happens? Once the financial markets collapse, it's every man for himself, and our way of life is gone and will never return in our lifetimes.
Well, that's sobering commentary, and, I wish it weren't so. I wish that it was not going to get that bad. The struggle for human freedom and liberty, undertaken by our founding fathers, undertaken by the revolutionaries in the war against King George, the very foundational principles of our freedom, the Magna Carta, the Bill of Rights, the Constitution, it's all at risk should this nation fall into absolute despotism and should the people become absolutely poverty-stricken, as we've seen the people of Venezuela become, Bill. That's what we're talking about here, is an absolute breakdown of life as we know it, and I don't wish it on any of us. I don't wish it on any of our sheeple people, friends, and neighbors either, the ones that can't see, they don't have the eyes to see or the ears to hear. Some may say they deserve it, but I don't think they deserve what's coming. It's going to get far worse than most people, even our listeners, would expect.
Sean, I obviously don't wish it, and wish we could have our way of life go on forever. It's good, it's fun, but it's also common sense that we're broke. We've overspent, we've overlived, we've over everything for the last 50 plus years, and paying it back means we're going to have to underlive for a generation at least, maybe two generations.
You know, I want to say one thing, though. I just had a very bombastic interview with Bill Still, who has been following the presidential election cycle so closely that he wasn't even aware that silver and gold have had a big move this year. And when I explained to him that silver was up 27% and the GDX was up 100% year to date, he actually responded and said, well, that's not a really big move. To me, it's a huge move. It's very monumental. But my point about bringing up Bill Still is that he mentioned that Trump has recently said that he could pay off the national debt in, say, 8 years. And to some extent, that makes sense. If you dispose the Federal Reserve and their embedded 6% built-in interest payment on every dollar they print into existence, and then you reprinted a national currency with zero debt, as John F. Kennedy did briefly before they killed him, you could see how it would be possible to get us out of this situation. I think it could happen. And I think to that extent, Bill still makes a good point. I don't think the reality, though, Bill, is that it will happen because there are absolute despots and oligarchs who serve the banks in control of this government.
Well, Sean, I hate to disagree with you, but I think it's mathematically impossible that the debt in current dollars, in current value of dollars, gets paid off. There's just no way. You're talking about 19, 20 trillion plus other, Social Security, et cetera, et cetera. You're talking about 200 trillion altogether being paid off by a padded 17 or 18 trillion dollar economy. Mathematically, it can't happen. But then you have another problem. Then you have the problem of what you do with the derivatives. And you collapse all the derivatives, and they shut out, and everybody sells them. There's not enough money in the entire world to settle the net of the derivatives.
Right. No, it's a very good point, Bill.
So it's not doable practically. Maybe in theory you could make a case for it, but it's not going to happen.
Yeah, you make a great point because, of course, the $19 trillion in stated debt does not include the unfunded liabilities of over $200 trillion. We see what's going on with the pension funds that are over-leveraged in Illinois, California, and other places. They're on the verge of absolute collapse, and I think that describes the U.S. economy and the U.S. debt situation to a T. You're absolutely right, Bill. Okay, Bill, listen, before we move on, I want to bring up one thing. And it's this article rebuttal that you wrote to Moriarty, and I just want to say this about it. Moriarty says derivatives net out to zero. You and I both know that that's impossible. Look at Deutsche Bank trying to liquidate $1.1 trillion of their derivatives book to JP Morgan and Goldman Sachs. Look at the absolute shakiness of the global international banks, all of which are insolvent. And then let's talk about what you've said for so very long, which is even if you're on the side of a winning derivatives trade, if the loser can't pay you, you lose too. Let's talk about derivatives.
Well, the bottom line is, if you just froze the game right now and everybody had to settle, you'd have half losers and half winners. And the system has gotten so big and the movement's so big that the losers don't have the capital, don't have the cash to make settlement. So you'd have half the world would be insolvent, and they would owe the other half of the world that booked the gains, but they're not really gains because they can't get paid on it.
Yeah, and let's break that down, because how big is the global derivatives market? I mean, I've heard numbers bandied about saying that it's as high as 900 trillion or a quadrillion.
Well, if you go back, I think it was 2011, 12, 13, in that neighborhood, the IE, the derivatives bean counters calculated 1.4 quadrillion.
Yeah.
And then they came back a year later or 2 years later, and they said, oh, no, we overcounted it. It's only 700 or 800 trillion. Use the figure of a quadrillion or a quadrillion plus. I mean, you're talking about the U.S. economy is only 17 trillion.
Well, and that's the point I wanted to make. So if derivatives netted out to zero, let's say that they netted out 90%. 10% of a quadrillion is $100 trillion.
Right. So
the losers don't have $100 trillion. Pardon?
The 100 trillion. Where is the 100 trillion going to come from?
That's
the
right.
losers don't have 100 trillion to pay the winners.
That's right. And we'll leave it with this. I continue to bring up the 1988 cover of The Economist, the Rothschild Economist magazine, with the phoenix rising from the flame of burning dollars and the gold medallion around its neck saying 2018, get ready for a global currency. It's 2016 and a half, Bill, and I think they're right on track. They're going to kill the dollar, and they're going to try to introduce a global currency to save us all.
Oh, I absolutely think the timeline going back,
30 years.
Or almost 30 years. That's about right. And like I said, this is the rally in silver, gold, and miners that you don't sell. Because if you sell, you're restocking yourself with fiat that with the flip of a switch can become devalued or worthless overnight.
That's right. Well, guys, I want to thank you all for listening to this important update with Bill Holter. And, of course, Bill Holter is one of the trusted pundits we speak to as often as we can, and Bill's work can be found over at JS Mineset. Bill, why don't you explain a little bit about what you're doing now with some of your writings and how people can find them?
Most of my writings now are on a subscription basis. It can be found at jsmineset.com. We have a public side, which will continue, and then my writings and a weekly interview between Jim Sinclair and I gets put up generally over the weekend. So if you do want to follow the bulk of my work, I do put out one or two public articles per month, although I put out two this past week. But if you want to follow my work, please come to jsmineset.com.
Absolutely. And Bill, again, thank you so much for your time. We very much appreciate it. And guys, we appreciate you tuning in. And thanks for your support over at sgtreport.com and thelibertymill.com. Real news 24/7. And the last word on this thing, guys, I would just really advise everybody to take the time to warn all your friends, family, those you love, one more time. So often our warnings are not heeded and they fall on deaf ears. But I think the hour is late. It's worth trying to rattle people's cage one last time. Try to get them to wake up. Give them one last warning, because I think their chance to get precious metals and save themselves from absolute catastrophe, their time is running out. So I guess that's it. Bill, thank you so much.
My pleasure, Sean.
All right, guys, thanks for tuning in, and stay tuned. On Sunday night, I'll be releasing a new interview with James Perloff, and we're going to be talking about the history of false flag terror that has dragged the United States into war after war after war, going all the way back to our very foundations. Have a terrific week. God bless.